Elon Musk, the billionaire, has sold Tesla shares worth $6.9 billion. Why? Because he needs the cash in case he is forced to go ahead with his deal to buy Twitter. And Twitter was quick to spot this sale of shares by Elon Musk. So they asked Musk if he was done selling. And this is what his reply to the tweet was. He said, and I'm quoting, "In the hopefully unlikely event that Twitter forces this deal to close and some equity partners don't come through, it is important to avoid an emergency sale of Tesla stock." And according to new filings, Elon Musk has dumped about 7.92 million shares of Tesla. Musk has not done this for the first time. Since announcing the deal, Musk has been dumping Tesla shares. Earlier, he sold equity worth $8.5 billion. Elon Musk may say that he is dumping Tesla shares to pay for Twitter, but many believe that is not the case. Elon Musk says Elon Musk may keep selling the Tesla shares with or without Twitter because Tesla shares are overvalued. And we are not the only ones saying this. In fact, Elon Musk has once admitted this himself. Musk is one of the world's richest persons, but most of his $260 billion fortune is derived from his stake in Tesla, the same stake that he has been shedding. In November last year, Elon Musk conducted a Twitter poll. This was about selling 10% of his position in Tesla. And soon after the tweet, he sold 15 million Tesla shares. In April, again, he offloaded 9.4 million shares. Now the Tesla CEO is back to dumping shares. So in total, in the last 10 months, the Tesla CEO has sold around $32 billion worth of stock in Tesla. And this brings us to the question, is Tesla grossly overvalued? And is Musk using his Twitter deal as a smokescreen to dump the Tesla shares? Let's begin with the first question about Tesla's valuation. Tesla's market capitalization topped $1 trillion in October 2021. This meant Tesla was worth as much as the next 10 most valuable global automakers combined. And this includes the likes of Honda, Volkswagen, Toyota, and others. In the last 3 years, Tesla shares have increased 900%. Compare that to US indices. Dow Jones increased 50% in 5 years. Ford, one of the biggest car makers, increased just 20%. But Tesla rose 900%. So clearly, Tesla is way overvalued. Tesla was once a game changer in the world of electric vehicles. But the threat of competition still looms large. Many global automakers are working on their own EVs. Tesla currently dominates 14% of the worldwide EV market. But to say it will control 20% of the market in the coming years is too optimistic. Tesla has had a solid head start in the market, but other automakers seem to be catching up. As for self-driving cars, they are still a distant dream. I mean, have a look at this video. It was released by a Tesla critic. It shows a Tesla in full self-driving mode. The car appears to run over a child-sized mannequin in test conditions. This 32-second video shows 3 instances. In all of them, the Tesla drives through the mannequin. And this very video has now raised concerns about Tesla's self-driving feature. Which brings us to the second question. Is Elon Musk using the Twitter deal as a smokescreen? Well, that is what many believe. Musk is the CEO of Tesla. If he suddenly starts dumping shares, the company could collapse. So he needs a valid reason for it. And what better than buying one of the biggest social media companies in the world? When Musk talked about dumping shares, A Twitter user asked him if he will buy back the shares if the deal does not go through. The Tesla CEO said he would. Now, will that happen or not? That is quite literally a billion-dollar question. With me on the broadcast this minute is Martin SFB Bryant. He is a tech expert and editor of the Proceed Now Tech newsletter. Thanks very much for being here on the broadcast. What do you make of Elon Musk's claims that he is dumping these shares again to prepare for that scenario in case that court-enforced Twitter buyout deal does happen?
I think there's a lot of truth in that. I think that there could be more to it. There could be an idea of getting out of Tesla, giving himself a bit more liquidity. But certainly he does really sensibly need that cash on hand in case, as you say, a judge in a court in Delaware in October does decide that he has to buy Twitter, which sounds quite extreme. But the judge involved in the case did actually make another company acquire a company it had previously promised to when it was trying to back out. So it is certainly a realistic possibility, and it makes sense to be prepared for that.
But like you said, there could be more to this than what meets the eye. Let me ask you, what impact will this sale of shares have, if at all, on Tesla and investor sentiment?
Well, I would like to think that if you're a serious, you've got a big stake in Tesla, then you probably have priced in Elon Musk's unpredictability and his kind of maverick sense of doing and saying things that may or may not be true. At this stage, it's kind of, it's well known. And but as you were saying, there are the future of Tesla definitely looks uncertain with a maturing electric car market, very appealing alternatives to Teslas coming from other manufacturers. The no sign of the full self-driving mode coming into full effect anytime soon. Something that Elon Musk has promised time and time again, and it does feel that perhaps Elon Musk's reputation and his ability to tie his personal brand up with the brand of his companies in order to raise investment could end up coming back to bite him.
On that note, has Elon Musk bitten off more than he can chew as far as this Twitter buyout deal is concerned?
I think that might be the case. If you look at just the response generally over the last few years, the public response to Elon Musk from Twitter users and beyond has been generally very positive. He's done some unpopular or controversial things, but generally people have seen him as a great innovator. But the more active he's become on Twitter, the more he's kind of thrown himself into this deal, which doesn't seem to make a lot of sense and has been kind of batted backwards and forwards. There's been a lot of dispute over whether it's going to go ahead and how it's going to go ahead. I think he has taken a knock to his reputation. And as I was saying previously, his reputation is tied up in the fortunes of his companies, and his companies' futures are very much tied up in his reputation. So, it's an interesting problem to have, and it could end up being a cautionary tale for other billionaires.
Martin, thanks very much for being here on the broadcast.
Thank you.
WION now available in your country. Download the app now. Get all the news on the move.